Hello and welcome to Ask for a Trend. I'm Josh Lipton, and for the next half hour, we're going to be breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. Markets mostly flat again Friday, with the S&P scratching out a gain to snap a 4-week losing streak. The Nasdaq leading the way, rising 0.5%. We're going to dive into the rest of the day's market trends. Then Apple is reshuffling its AI business, and a recent report revealed it might be losing $1 billion a year on Apple TV Plus. We'll take a look at what the tech giant needs to do to get its mojo back. Plus, some brave investors have been scooping up shares of beaten up stocks like Tesla, but the market isn't exactly rewarding them for it. We're going to explore the retail investor landscape. While investors continue focusing on big tech companies like Tesla and Nvidia, another Mag 7 name, Apple, is also making some news. For more, we're going to bring in here Lance Ulanoff, editor-at-large at Tech Radar. Lance, it is good to see you. So we got a lot of Apple news, Lance, to go over. Let me start here with you, because I'm interested in your take. You got this Bloomberg report that Apple is shuffling its AI executive ranks, trying to get its AI efforts, it looks like, kind of back on track here, apparently, Lance. Longtime Apple watcher that you are. I'm curious, you saw that headline, you saw that report. What did you make of that news, Lance?
Well, obviously, Apple had to do something, right? We all know that they publicly said that, the Siri that they promised wasn't going to arrive when they said it would arrive, and it would be later this year. We aren't not sure of when. And this is a really important update because it kind of brings Siri into some alignment with the competition out there, ChatGPT, Gemini Live. And it just wasn't happening, and no one really understood why. So Apple made some really important changes. They moved the executive that was in control of it out or away. At least this is what the report says. They've got Mike Rockwell in there. But the thing that is important here is Mike Rockwell is part of Craig Federighi's group. Craig Federighi is a longtime Apple guy, gets things done. Obviously, he's very public facing, but he's also he's a guy, I remember years ago when Apple had to sort of recast the Mac Pro, and in the room talking about it that day was Craig Federighi. He was one of the core guys. And I think when things are going wrong, Apple's going to look at him and say, look, get this on track. And so this is actually good news.
Yeah, for viewers who don't know, Lance, Craig Federighi, of course, when Apple has that big software show every year in June, the guy with the incredible hair leading it, yes. That is Mr. Federighi. There's an interesting theory out here, Lance. I want to just run this past you because I find it very interesting. There's some bulls on the street and on Apple, and part of the argument I've heard them make is, at the end of the day, here's what they're saying. Apple doesn't need its kind of AI special sauce. It doesn't actually need kind of the magical proprietary AI. And I think their argument is because consumer AI, as that trend develops, and you're going to get these killer AI apps, that's going to just generally increase demand for consumer electronics broadly. And that is just going to be good news for Apple, for the App Store, the iPhone, the iPad, the Mac. What do you make of that argument?
Actually, I kind of agree with that. Look, AI is not necessarily driving sales. And I don't think Apple even needs AI to drive sales of the iPhone. It's still the majority of their profit. And it is because people buy hundreds of millions of these things. They go on the upgrade cycle. Even if it's a minor upgrade, they still do it. They're making tons of money from services which have very little to do directly with AI, Apple Intelligence. So, yeah, I don't think they need that. But there is this sense that Apple, this is what I wrote about today, that Apple is not moving the needle, all right? It's not doing the thing that everybody goes, oh my gosh, I got to have that. That is so exciting. That's the thing I want. And I'm not really sure Apple Intelligence has ever been that thing. So what is going to be that thing for Apple? What are they going to tell us over the next 6 to 9 months that actually moves the needle?
And what do you think that could be, Lance?
Well, what I'd like it to be is a folding iPhone. Look, we know we believe that Apple is working on a foldable device, whether it's maybe 2 devices, a foldable iPhone, a foldable iPad. Apple would make it better than anyone. It might be thinner. It might have less of a crease. And that would actually be a very exciting product. And I think that's what the foldable space has been waiting for Apple to step into it. And I think that what I'd love to see Apple do is actually tease it at WWDC, the developers conference that happens in June. Not something they would normally do. They have done it on occasion. They've done it with Vision Pro. They did it with the Mac Pro. They've done it over time. But this would be a big moment. I don't expect them to actually deliver it then, but maybe in the fall then, or maybe not, maybe in the following year, but still show us what you're doing. Get us excited and just take us along for the ride.
What about, Lance, what about that foldable phone? What about that form factor that you think, why would that, you think, potentially be so exciting to consumers more than, your standard iPhone?
Well, I think so. Samsung's kind of created this market, right? They've got the Samsung Galaxy Z Fold and the Samsung Galaxy Z Flip. And I think the more interesting device is the Flip device for general consumers. It's kind of a throwback in a way because it's got clamshell design. And Apple really has never had anything quite like that. So imagine something that looks like an iPhone when it's unfolded, but when you fold it up, it looks like something completely different. And if it's thinner than any of the previous foldable devices, that'll be exciting. And it's honestly, it's because it's Apple. Apple has a certain cachet, and when they enter a market, it gets exciting. If they can price it right, if it is exciting and it looks good and it works well, I think that's going to move that market.
Lance, always good to see you and to have you on the show. Have a great weekend.
You too.
Stocks closed the day higher with the S&P 500 snapping its 4-week losing streak. And here with the trading day takeaways would be Yahoo Finance's Jared Blickery. Jared.
Thank you, Josh. My first takeaway is you got to watch what they do, not what they say. And I'm referring to two Bank of America, B of A reports that came out this week, the Flow Show and also the Global Fund Manager Survey. So the Flow Show came out today. This tracks the flows of what happened over the last week. Global Fund Manager Survey comes out each month, and they survey the asset managers managing something like $500 billion worth. And they're saying two different things. We talk about the hard versus the soft data. I think this is a perfect encapsulation. So the Global Fund Manager Survey, what they were saying, and we learned this earlier in the week, this was the second biggest drop in global growth expectations ever. Then U.S. equity allocation, that was the biggest drop ever. And then cash allocation, that was the biggest jump since March of 2020, and that was the depths of the pandemic. But then we follow what they're actually doing, where the flows are going. Guess what? We just had the biggest week of 2025 inflows into global and U.S. equity funds. Then we had a huge 2-week buying of stocks by B of A private clients. And then when you consider the recent outflows, those are only 1% of the post-election flows. So there's some selling here, but when you consider the total, especially $16 trillion worth held by foreigners, that is just a dent. So the takeaway is you got to watch what they do.
Let's get to some hard sector data. Come
yes.
on, who won this week?
All right, so actually banking was number 2, XLF was number 2, energy was number 1. We might have time for that later, but let's talk about banking right now because I just had an interview with Christopher Whalen of Whalen Global Advisors.
Smart guy.
Yeah, very smart. He knows banking better than anyone. He had some jaw-dropping comments. This is going to come out next Tuesday in Stocks in Translation. Jaw-dropping comments about the U.S. housing market. Let's take a listen.
Well, in 2008, half the market was private. So, when the market crashed, we were all standing there, we're all broke, everybody in this room was broke. And it took 4 years to work through all those private assets, foreclosures, everything else. Today we have a government market, but the prices have gone up so dramatically because of the Fed, because of other factors, that I think when we see a reset, it could go back down to 2020 levels. Whoa. Imagine that. Now, that won't be the end of the world, but it means a lot of people are going to be underwater.
In case you missed that, he said there's going to be a pricing reset in U.S. housing back to 2020 levels. That seems to be pretty big, not on the horizon in the near future. By the way, he likes banks, but not really until mid-year, and that has to do with quantitative tightening winding down here.
And but you said financials were number 2 this week. Who did you say to number 1?
Energy. Energy is really interesting. I don't know if we have time for a chart, but energy has been on my radar. Number 1 sector this week, number 1 sector this year, and they were punching up against decade-and-a-half highs. So if they finally break through, and it's taken a while, that's something to write home about.
All right, final jickery. I said jickery, almost. It's Friday.
It's a portmanteau. Everybody's entitled to one. Okay, we got to talk about the U.S. dollar index. Well, I love to talk about the U.S. dollar index. I've been tracking seasonality, but before I get to the seasonality chart, which is turning bullish, by the way, I want to mention that the dollar and stocks have been moving in tandem recently, and this is kind of a break from history. I just did a presentation on this earlier today with some Goldman Sachs charts, but suffice to say we are in interesting territory. But only last week I got a buy signal on equities on a seasonality basis. Now I'm getting one in the dollar, and here's what the seasonality map in white looks for 2025. In green is what's happened so far this year. I'll trace it out in case you can't see it. It's inflecting up just a little bit, just in time for this little bounce here. But I would add that the dollar doesn't really get positive until later this year. People are probably more interested in what stocks are doing, but with tariffs and everything, you got to be watching the dollar.
So you're heading to the weekend. What's on the radar? Is the greenback? Is it Bitcoin?
You know, I think I'm going to take a break from markets over the weekend. 24 trading, that's 24/7 trading. That's around the corner, and I got to rest up for that.
That's wise words.
You
Wise
got it.
word, Jared. Thank you. More Ask for a Trend right on the other side. U.S. stocks climb into positive territory in the latest volatile week on Wall Street. While the S&P 500 ekes out a winning streak, the short-lived gains for markets is spelling out some pain for retail traders buying the dip. For more on the unpredictable investing landscape, let's get to Investopedia and editor-in-chief. That would be Caleb Silver. Caleb, always great to see you on set. So let's start here after such a week. Investopedia, the audience, the readers, what's the general vibe like? What are people feeling? What are they saying?
Yeah, they're cautious right now, and they've been pretty optimistic even up until the last few weeks, but this cautiousness is just because of the uncertainty. And what do? We keep buying the dip on a lot of the biggest stocks in the market. We do that through our 401ks, we do it through our IRAs. People do this on a regular basis. They collect the big stocks. The big stocks have been falling. We got most members of the Mag 7 in a correction or worse. I think only Meta is the only one beating the S&P 500. So they keep buying the big stocks, trying to buy the dip, but they've been losing money doing that over the past few weeks. Meanwhile, institutional investors, global fund managers have been moving the other way, and we know they move the market. So it's a real imbalance there. I think that causes a lot of cautiousness, a lot of skittishness among investors, but also there are some opportunistic ones out there looking for potentially ways to ride this on the way down or ride the inverse on the way up if and when things reverse.
If they're looking for opportunity, what are they buying?
Yeah, they're looking for the inverse Qs or the highly leveraged ETFs that will amplify their gains if the market rises. Lots of options activity today being a triple witching day, very interesting day. See the market go up on a triple witching day in this environment, very interesting. But they're also, again, looking for the opportunity either in the stocks they wanted to buy but never did, stocks they've been collecting over the years that are now on sale, arguably, and continuing to buy into the market every 2 weeks on a pretty regular basis. Meanwhile, they're concerned, though, about the economy. We look at our anxiety index, which measures their traffic to fear-based terms, and they're a lot more worried about a recession than they are necessarily about a bear market. They know we've been through some of these corrections or mini corrections in the past, but they're more worried about their personal finances and the general state of the economy.
Give me some specific names. Any on the radar?
For individual stocks, it's the Mag 7, obviously, but it's still some of the quantum AI stuff. When you hear any news out of the White House or just out of the chatter on Wall Street about AI or what's coming next, obviously they're interested in that. NVIDIA is a big holding among our readers, but most retail investors, so they follow that stock pretty closely. But they're also looking for opportunities in stocks that haven't made that move in a while. And outside the U.S., we've seen outside the U.S. markets outperform the U.S. stock market now for several weeks in a row. We know that's not very typical. So now they're poking into emerging markets, ex-U.S. Where can I buy that's not exposed too much to a potential tariff war?
What about Tesla? I read this report, this was interesting, that retail traders been accumulating Tesla to the tune of billions in net purchases. This was per JP Morgan. Of course, we know that stock has been getting shelled. What do you make of that dynamic? What does it tell you?
Well, they have seen the dip in Tesla rise, from the ashes many times before. Tesla is one of those stocks that if you have patience, the stock can rebound from a 40 or 50% decline. Not crazy over the past 10 years. We're now in a 42% decline off of its all-time highs, which were not that long ago, by the way. But you know the math. Stock falls 35%, you need a 50% gain to get it back to par. Falls 50%, even more than that, 50%, you're looking at a 75% gain. So people that are buying it are hoping that maybe the CEO will turn things around if he starts to focus on it a little bit more. And he was on a call with his employees last night, urging them to not sell the stock and to say that the best is yet to come. They're talking about a cyber cab that's coming out. He's talking about Optimus, the humanoid robot. He's saying, imagine a future that is full of abundance. You are part of this. You own shares in this company. But they've been watching those shares decline and the value of their holdings decline.
It's interesting because I saw some bulls pound the table. I saw Piper came in, they're overweight. They put out a note this week, and they were talking Tesla, and they were reminding their clients, listen, Tesla is drama. Tesla is volatility. And if you pull back the chart, this isn't the first time they reminded their clients that Tesla has in fact doubled, and then get cut in half. And they told their clients, and these are bulls, it might not be the last time either. It is about time frame. It is about keeping that history in check.
Yeah, and I think that's what he's trying to reassure his both employees and investors. And he owns, what, 12.8% of the shares, so it's kind of what he says goes. But you know who owns the next largest chunks of those shares? It's the Vanguards, BlackRocks, and State Streets of the world, either through ETFs or index funds. And they don't have a lot of patience when a stock drops this much in one of their big funds. So we'll see if they continue to hold it. But we've seen profuse selling. And I don't think it's a lot of individual retail investors that are doing that. I think it's these institutions that are saying, how much longer can we hold this? There's too much volatility, a lot of key man risks there. And straight up, sales are not doing that great in Europe, China, or the US. They're three biggest markets.
What do you make as a longtime market watcher? I mean, obviously, a lot of people are getting concerned. We had a smart market strategist on the show today, also a longtime market guy, more optimistic. And his view was, Caleb, he remains optimistic and he thinks this bull market's intact. And I asked him why, and he said, listen, if I don't think there's a recession, and I think the Fed's cutting this year, and I still think earnings are on track to pop about 8%, I stick with this market. What do you make of that outlook?
Those are the three things we usually look at when we say, why shouldn't the market rise from here? We're paying and we're betting on profits to rise in the future because companies are growing their earnings. And earnings look like they're going to grow 20%-ish for some of the biggest companies out there. So yeah, and we may not have a recession. We might have a rolling recession through different sectors. If you look at consumer discretionary right now, especially, you might see a rolling recession through the leisure and hospitality area if we get a pullback on spending. You might see that in different areas of the market. But there seems to be another variable here right now, and that's the unknown. Typically, you have a pretty good sense of where policy is going. We don't know where policy is going right now, so that's the bogey here, and that's the thing that could derail what really has been common sense for investors for decades now. If all these things are in check, we should have rising profits and rising stock prices.
Uncertainty, that's the name. Caleb, always great to see you.
Thank you.
Thank you. Coming up, we're looking at whether U.S. stocks are losing dominance over the rest of the world in our chart of the day. More asking for a trend right on the other side. U.S. stocks have had a dominant run against the rest of the world, but that ratio is starting to reverse. Yahoo Finance's Julie Hyman joins me now with a closer look in our chart of the day.
This is a phenomenon we've been talking a lot about, Josh. The fact that we've seen rotation from U.S. stocks into stocks elsewhere, and that's because of the much discussed trepidation here in the U.S. over tariffs, and also the fact that it is spurring action in other parts of the world, like Germany, for example, to now introduce some perhaps long needed stimulus into the system. So this chart was put out earlier today by Joe Weisenthal over at Bloomberg, and this looks at a ratio of the Vanguard total stock market ETF to the Vanguard ex-US ETF. Basically, when this line is rising, it means that US stocks are dominating, and it has been rising for a long time because stocks in the US have been dominating for a long time. That is starting to change. Obviously, directionally, it has gone the other way for a long time, but this is sort of the longest time on this chart that you can see where the rotation directionally is going in the other direction. So we've been trying to suss out, okay, how long could this last where you see that rotation? Where is the money coming from? Where is it going to? We talked about this with Julian Emanuel a little bit earlier today about whether he thinks that people should be all in on outside of U.S. stocks. This is what he said.
Is this a time to just go out hand over fist and buy those and sell U.S.? It isn't. Okay. People have been underweight the rest of the world for a long time. We'd say address that underweight. But importantly, you have a weaker dollar, you have the AI story, and you have sentiment so negative in the U.S. that it is likely a time, again, that the U.S., even if it ends up on a year or two basis, underperforming the rest of the world, it will likely rise as well.
So I think two things to sort of take away there from what Julian was saying. One is he says, if you're underweight the rest of the world, ex-US, maybe you want to bring up that weighting. And this is underweight versus the global benchmark. So maybe you want to nibble on some stocks outside of the US. But at the same time, he says, and note what he says there, even if the US underperforms for a couple of years, eventually that dominance, he thinks, will reassert itself. And so he still, as you and I discovered, is very bullish on U.S. markets. And so we'll be monitoring this chart to see how that plays out over the next couple of years.
All right. Thank you, Julie. Appreciate it. That is a wrap on today's Ask for a Trend. Be sure to come back Monday at 4:30 p.m. Eastern for all the latest market moving stories affecting your wallet. Have a great night.